Been a fantastic week so far. We're a few days into it now, coming up to the end of the first month. Of course, it's been what a great start to the year it's been. Honestly, um, I'm trying to connect this up to my actual Elevate Your Capital Facebook page, so that it can differentiate what you see on my profile. I know there's a lot of I'm organize it all at the minute: capital, health, mountains, etc. There's a lot going on, so you're in the organization period of something fantastic and something brand new, or not so much brand new, but more innovated and advanced from previous. So what I'm jumping on today here to show you on the lives is the trades the setup that I've given today, the trade that we're currently in and taken, and just to give you guys a little bit of help when it comes to learning how to trade the markets, because we all start on our own journey, whether you start with £100, £1,000, £10,000, 100,000, whatever it may be. Start wherever you can and learn the skill, because once you learn the skill and the strategy, the rest sort of just follows. And not only that, is that you can then pay that forward and teach others how to do it as well, which is what's currently happening in our premium group. And I'm very, very excited about that, because we've got an up and coming trader, not long left university, works hard, but he's been resilient, and he's stuck to trying and over again. And this year is going to be brilliant for him. I just know that, as well as the others in the group as well. They're all going at their own pace, and I'm delighted to be seeing a couple more new faces this year in the group. So let's dive into the trade that we're currently in, what I was looking at, and what I've also given that we're going to be looking at this afternoon. So if I just remove this for now, then I'll be able to explain it clearer, because to some of you that might look bit of a mess. So this is what we're in at the minute. So the red and green represent take profit and stop loss. Okay, stop loss is the area in which your account goes into minus, and take profit is the area in which your account goes into the profits. Okay, now at the end of this here, okay, is where the trade will close automatically if I've set that right. This is just simply using TradingView to show you what my trade looks like, or our trade looks like. Okay, now let's run through it just for those that don't know much about trading. Okay, so the entry part is where the red and the green can mix. Okay, so this line here is where we entered, right? There's the signal for those who want to have a look. 745 sell gold with the stop loss at 2041. 2041 is this line here. So if these candles here, guys, if these lines, these colored lines, they're called candles, if these candles go up here, okay, up to that part there, and get to the top of this red box, it closes our trade, and we've lost. Okay, we've made a loss. If, however, the candles, because as you can see, they're moving up, down, up, down, up, down. If it goes right down here, then we've smashed our take profit. But at any point in this area, or in the whole trade, at any point, we can get out of the trade. So, for example, if you see it going and it gets to halfway here, and you decide, I don't want to, I don't like the look of the trade anymore, you can close. Okay, that's up to you. And also, if it gets to these areas here and we start seeing a reaction, okay, which we guarantee we will, okay, see a reaction here, heavy rejections, I call them, then we can decide to get out the trade. Okay, so you're not committed to this area or this area. These are called risk management. What that means is that you're willing to lose a certain amount of money in order to gain a certain amount of money. Okay, look at it like going to the bookies, right? If you put £100 on a team to win, and it's 2-to-1 odds, okay, you win, you make £200. If you lose your £100, right? And that's simply what like trading is. That's why a lot of people compare it to gambling, because essentially it is, right? But the difference with gambling and trading is that you wait to see something before you place a trade in trading. Whereas in gambling, you place the money and then await the outcome. Okay, so that choice is that's really what makes the difference. A lot of people have similar thoughts when it comes to trading. So and gambling. So they think it's the same, but that's in very simple terms, that is the difference. Okay. Gambling is putting money down, waiting for the outcome. Trading is waiting to see an outcome and then putting the money on. Okay. So that is that's one lesson for you guys today, right? So I've seen a pattern, I've seen something here. I'm willing to risk 23 pips. Now, the reason why that it's in pips is or called or point in percentage is because it represents different money, right? 23 pips, if you was to put £10 on it, would represent £230, right? 23 pips, if you was to put £1,000 on it, would represent 23,000. Okay. So the pips are always the same. 1, 10, 20, 50, right? What they represent is based on the amount that you're willing to risk. Okay. So that's why it's done in pips, because obviously it's worldwide, right? You can't get the same amount of money in US dollars than you can in pounds than you can in euros. They're all different, aren't they? So the charts are representing pips, and then that will change depending on you and your account. Okay. But I don't want to go too much into that. That's for obviously courses, and I'll go into more details for you guys on calls as well if you'd like. What I want to show you here is why I took this trade. Okay. So first of all, I like to get in trades at certain times. Okay. Now, when the patterns show or when they reach my zones and it aligns with the strategy, I'll get in. Doesn't really matter the time. I prefer it to be before 3 p.m. And after 8 a.m. So somewhere between 8 and 3 p.m. But again, if it aligns and it shows, we're taking the trade. Okay. Because we don't control the market. Next thing I like to do is to see, obviously, what it's done at that zone before. So let's have a look at this here. This is the trade that we got in today, okay, and currently running right now in. Well, it's 21 pips in profit, but it did reach 32. So once you're in the trade, that's up to you when you get out. Really, you can ask for my advice, but at the end of the day, it's down to you as an individual to have your targets. So as you can see here, maybe you can, maybe you can't. We have these spikes here, right? These are all areas of liquidity. Basically, it's where the market's moved up, buyers have got in, and then it's dropped down. So they're trapped here. So you've got loads of buyers trapped here, okay? Then the market's moved up again, buyers have come in, and the market's trapped them again, and it's left that money on the table there, okay? So you can see every time it gets to this area here, it traps buyers. Okay, this is my opinion. It traps buyers and then drives the market down. So when we seen this earlier, okay, this spike here, for example, because I like to get in on the spikes because it shows a rejection of that area. Okay, up, spike, down. Okay, and so when I seen this spike here, so this is where we entered. If you look, it was 7:45. We entered. So there. Okay. These are, if I just go on to 5 minutes, you'll see better. That's where we entered. And I entered because we'd had this rejection. Now, ideally, I would have liked to have gotten in on the rejection. That makes it all the more sweeter. But but there were many factors. I won't go into too much detail about it right now, why I didn't get in on the spike. But then I seen a second spike just after, and that's when we entered. And we put the stop loss at 2041 just above the rejection spike. Because if it goes above there and closes, then it's highly likely it's going to continue. Okay. And obviously, throughout this morning, we have been waiting. So, I've had some breakfast, shower, done a workout, going gym soon. And whilst we wait, because it's not up to us when the market decides to make its move, we just set in our parameters and then let it play out. Okay. So I'll go over what I've been. But so yeah. Anyway, that's the reason why we took that. But here's the kicker. Here's the thing that I'm actually looking at. Right. Another reason why we took this trade is because I'm actually looking at this buy zone here. Right. I actually believe, because of the news that's upcoming this week, and certain things that happened yesterday as well, like big like breaker structures, is I think the market's going to actually continue up. Um, it's closed above the 2033 area, uh, which this area is quite a strong area. So if it stays above this area, it can come down under and then go back above. But because it's stayed above this area for quite some time, or sorry, not this area, sorry, this area, it's shown me that there's strong buyers in the market that could drive the market up. So again, we'll see how it plays out. But I have this buy zone here today at around about the 2026 area. So why not try and sell down into it? We risk 20 pips, which means we've made a 1-to-1. That's that done. And we're going to look at this buy zone later. Now, why am I looking at this buy zone? Okay. Uh-huh. Why am I looking at this buy zone here? So as you can see, maybe you can, maybe you can't. It's been rejecting here, this area here, which is why we're in the sell right now. Okay, reject, reject, reject. Stop loss above, because if it goes above, then of course it's going to continue. But here, this buy zone. Now the reason why is because I use a few indicators. Right, I've added these to the Elevate strategy recently, and they've been working wonders. So let me show you what the indicators are. Okay. So first of all, it's called SVP, and that stands for, I believe, Standard Volume Profile. And if I click on that, the red lines show you where the most volume is being traded in the markets. Okay, most people sort of coming in. And as you can see here, obviously, ignore this one for a moment. I'll explain why. But as you can see here, this is here. So straight away, that's aligned with my already sought out, already noticed demand zone. Okay, so I'll turn that off, but that's aligned with that. Next is I use Lux Algo sessions, but I've adjusted it in my own way to see the top and the bottom, the highest and lowest points of each session. Okay, now this is New York, this peachy color, and this is Tokyo, this red color. Okay, so I can see that there's liquidity here at the bottom of this zone here, the bottom of Tokyo, right? And usually what will happen is London or New York will use Tokyo's the Tokyo session to take out liquidity before making its move. Okay, so what I mean by that is that it will look to drive down this to clear out this area here before then making its move up. Okay, so that's what ideally what I'm looking at. Next is I go over this again. This may sound like a load of mumbo jumbo to you, and that's perfectly fine, because if you've got your own strategy or if you've not traded before, then it won't make sense to you. But if you use this and practice it day in, day out, you will see this for yourself playing out beautifully. And that's exactly why we've collected over almost 1,500 pips this month. Okay. Um, so let's show you what it is, right? So we're going to go from the bottom of the previous session, so New York, go from the bottom to the top of the current session, yeah, with the Fibonacci. Drag it, start at the bottom. So click this tool over here, start at the bottom, drag it to the top. And as you can see, the 0.76, well, just about, there you go. It aligns in well with this demand zone, okay? Now, ideally, actually, I would probably want this zone here, but I don't stick with it. I'm going with the 0.76, okay? So you drag it from the, sorry, I got that wrong there, bottom of the candle. So the wicks don't necessarily matter because it showed, yeah, there you go. So from the bottom to the top, and then you look for the 0.76 area. So that aligns perfectly in here. We have liquidity here to be taken. We have the 0.76, and we also have this volume profile aligning. So all of those align to show that we are looking at this trade as a buying opportunity, okay? Now, what we would do is simply uh, just delete those, close them off for you. So SVP, Lux Algo sessions, and the Fibonacci. And then you look for a demand, an order block. An order block is basically a move down before the push up. Okay, so this candle here pushed up. This one was, let me just point it out in case you can't see it. This candle here, okay, was the one that the last one to push up, other than of course this one. So we're going to look at this area as an order block, okay? What we're going to do is wait for it to come down, then look to get in and put our stop loss around about 20 pips, 25, and then we'll target the highs there. So yeah, that is pretty much it. We are in a trade right now. As I mentioned here, so we'll be looking to do a double snatch today. Yeah, so hopefully that's made sense for you guys. This is gold, by the way. Gold versus the US dollar. So if there's a demand for gold and people are buying, usually in times of panic, then gold will go up. And of course, if that equals with the weakness of the US dollar, gold will shoot up. Now, why can't I? Okay, so we're going to have JOLTS job openings later, which is high impact news. Okay, you don't need to know all the ins and outs of why that is. But what you can do is you look on Forex Factory and you'll see a red box. A red box represents high volatility, meaning at that time there's going to be a lot of movement, very quick movement, so up and down really quickly. Okay, but most importantly is tomorrow, January 31st. There's going to be CPI news for the Australian dollar. There's going to be preliminary CPI for euro, and there's going to be non-farm payroll, GDP, employment cost, and followed up by the Fed funds rate. Now, the federal funds rate is expected not to change, okay, which means it's not going to be, hopefully not going to impact, well, not hopefully, but it's going to impact too much, right? But I'll explain that on a different video. But basically, when at 7 o'clock tomorrow, expect huge spikes, huge movements. So if you are a trader, I'd recommend that you get out by at least like 3 o'clock tomorrow, or 5 o'clock latest. Again, if you want to ride the wave and hope, then fair enough. But I don't like doing that. I prefer to be out of trades. Sometimes I've caught it and it's made some great pips and profits. Other times it's completely destroyed me. So it's just just not worth it. Like, because you don't know what the outcome is going to be. There's nobody out there that does until it's been announced. But anyway, guys, so yeah, that's what's going on in the premium group. Again, as I mentioned, I will be posting at least one trade a day in the free groups, so you can feel free to follow those and to see how you get on with them. And the premium group, you will get one-to-one calls with me. You'll get a setup and a zone every single day. You'll get several trades a day, and you'll also get some nice promotions and discounts from other services that I provide for being part of the community. So, as well as recordings of things like this in the vault of trades taken, losses, and wins, and the strategy in itself. But let's just go over it one more time for you guys as to why I've got this. So over the last, because I don't like to look too far back, okay? Over the last few days, you can see that we're in an uptrend, okay? So since last Thursday, the market's been mainly moving up, yeah? We've had drops down, of course, but mainly moving up. So I look on the previous session, marked out by Lux Algo indicators on tradingview.com. And I use the Fibonacci from the bottom of the move to the top, okay, ignoring the wicks, and I look for the 0.76 area. That aligns here. If I just remove this for now, okay, you can see here 0.76 marks out there. So what I'll do is I'll mark out that zone. Right, that's step one. And then what I do is I look for an order block. So an order block is basically the last move down before a big push up. Okay. And if you look here closely, guys, you can see that this candle was a big move up. Yeah. Can agree. That is a big candle in comparison to the other ones. So this now becomes an order block. Okay. Where big buys will come in or have come in before. So you want to use that to your advantage. Okay. Next is I look for liquidity. Going back to the Lux Algo, put this back on. Liquidity is basically the bottom and the top of the session, okay? Because that's the highest and lowest point of the current session, okay? And as you can see, liquidity here and liquidity here. So I can turn that off. Now, what we want to achieve is, just mark this out. What we want to achieve is kind of like this. Something like that, okay? What that will do is that, of course, will take out this liquidity here, this liquidity here. It will fill in, it will come into our demand zone, our buy zone, and then it will make its move by doing a break of structure or change of character, okay? Change of character, retracement, movement, okay? Hopefully that's made sense for you guys, and I'll post later to see how this goes on. Remember, I'm not in control of the markets. This will be my ideal scenario. The reason why is because, first of all, the team are already in a sell. Look, this is a screenshot, 7:45. We're in a sell with a stop loss there. So ideally, we would like it to go to there in time for news later on, and then we would look at something like this. Okay, so let's see how this plays out. All right, cheers guys, get in touch.